Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is October 15th, 2019, a Tuesday. And let's get started. Let's open up the charts right here and take a look at what's going on. First thing I want to point out is Brexit. You know, we're getting awfully close to the Brexit. The deadline for it is the 31st of October. And looking at these stories here in the news about the Brexit, I can see that basically the news and the mainstream press out there, they don't know what's going on right now. All they know is that there is no deal at this point in time. And so they're basically making up these stories, you know, to try to make news, I guess, but they don't really know what's going on. The deadline's rapidly approaching. What are they going to do? You know, this is a big deal. This is a big deal to the markets. If Britain goes out of the European Union with no deal on the 31st, and that's the default position in all of this, if they can't come up with a deal. You know, I assure you, we hear all this talk about here out there about a new referendum. Well, first off, having a new referendum is like voting twice on the same issue. They've already voted on this, you know. Having a second referendum it's like, how many referendums are you going to have to get the desired result, you know? I mean, that's kind of like they keep throwing that out there, another referendum, you know, but I don't think that's going to happen. The default position on this, never forget, the default position on this is to leave the European Union, deal or no deal, on the 31st of this month. Now, they have this proposal where the Prime Minister has to submit a paper asking the European Union for an extension. That is a possibility. But, you know, the closer we approach this 31st deadline on the 31st of the month, and they're not really getting anything done yet, here's one article from the National Post. Enough is enough. Fury as the European Union demands more Brexit concessions. I think that's kind of where this is all going, you know. Is the European Union, basically Boris is coming up with these deals, and they're saying, it's not enough, it's not enough. I think that's what's going on. I'm not sure, but I think, personally, that's what I think's going on. Let's take a look at the markets now. Let's take a look at the gold price. You know, the gold price took a plunge this morning. It's down $4.50, but it seems like it's bottomed out now and it's starting to move back up again, you know. And silver took a plunge too. It was about a half an hour ago. Both silver and gold took a plunge. What we're looking at is 1748 for silver, 1758 ask. It's down 14 cents, and that's this plunge. But it's bottomed out right now. I'm going to have to see where it goes. I don't think this is going to be a huge day down for gold and silver. I just think this is a little plunge in the price, you know, but not real huge. Anyway, let's take a look at gold again. 1487, 1488 ask. So we're just under $1,500, you know. Let's take a look at cryptocurrencies and see what they're doing. You know, cryptocurrencies haven't been doing a lot lately. They've been just basically going along sideways. So if I refresh the page, I can see which way this is moving. It's 225.9 billion. Refresh the page real quick here. 225.7. So it's moving down right now. But, you know, there's not a lot of energy in cryptocurrency. They want stability. Price stability? Well, for the last few weeks, we've had good price stability. I mean, it hasn't been going anywhere. It's been going sideways. Now let's take a look at the Dow Jones Industrial Average for this morning. And the Dow Jones is up today. 134 points. Well, 128 right now. I don't think we're going to see a lot of movement to the upside, and we got potential things coming in the very near future that could yield us downside to the market. You know, every time the market seems to take a plunge lately, if we take a look at this chart, this is a 5-year chart. Let's take a look at the 2-year chart. And you see, every time the market takes a big plunge, we see the plunge protection team step in. Was it 5 or 6 big banks? Anyway, the president goes to talk to these banks or whatever, you know, and next thing we know, we see the market going back up again, you know. The plunge protection team is right there under the market. So is the Fed, you know. So this is a very contrived, manipulated, controlled market. But here's the thing. Going back to 1929, the great stock market crash in 1929, you know, they stepped in and tried to stop it with voluminous, huge amounts of money. Right in the middle when the market was collapsing, they tried to stop it. You know, I'm going to tell you something. I know these markets are controlled. But if you get an absolute collapse in the market, it's awfully hard to actually stop it once it gains momentum, you know, and once the world starts turning over that way. Anyway, they do have the plunge protection team, but is their resources and money actually unlimited? You know, a big question mark in my mind, you know. And I mean, a lot of people would say, yeah, their money's unlimited, you know. I'm not so sure. Let's take a look now at crude oil. Down 19 cents on the day. And crude oil price is really, really low right now. It's $53.40 for sweet light crude. And we see the price rising this morning, but not substantially, really. It's still down 19 cents on the day. Let's take a look at U.S. Treasuries today. See what's going on. And what we see here is yields falling, but not significantly. We saw a bigger rise in yields yesterday or the day before than today's fall, you know. But that seems like what it's been doing for the last 6 months or a year. It's been doing that. One day up, one day down. One day up, one day down. That's what moved us into the yield curve inversion, was that marching effect. You were one day up, one day down. Moved us into the yield curve inversion. This moves us more toward the yield curve inversion when we get a day when they're falling. The yields are falling. Let's take a look now at the U.S. dollar index. 98.62. You know what? I call this, the past little period we've been in, I call it the calm before the storm. Today, we see the dollar index moving up very slowly, but there's not an awful lot of action in the markets right now. They're kind of quiet today, you know. And it's kind of like calm out there, just this little bit right now. Listen, thank you guys for listening to this market report. I'll catch you again very, very soon. You guys have a great day and give me a thumbs up. Bye-bye, guys.